In 1987, the market suffered a collapse so fast they called it Black Monday. Traders were watching years of gains vanish in hours. That exact same anxiety returned during the 2008 financial crisis. People watched their portfolios plummet, and friends and family begged each other to pull their money out before they lost everything. Then came the 2020 global economic shutdown. The market contracted violently, only to rebound 27% from its low to set new records shortly after. This animated chart tracks historical market data over those exact time periods. If an 18-year-old in 1985 ignored the panic and invested a steady $250 every month straight through those crashes, that money would have grown to over $1.8 million today. Before you can start building that kind of wealth, you must secure an emergency fund holding 3 to 5 months of living expenses in cash. Long-term compounding mathematically outpaces short-term market chaos. Anyone with a basic cash reserve can use this system to grow their net worth. Step 1 is downloading a modern, app-based brokerage platform to your phone. Open a tax-advantaged account. In the UK, it's a stocks and shares ISA. In America, a Roth IRA. These completely shield your profits from taxes. Once the account is open, navigate to the menu and select Deposit Funds. You can link Apple Pay, a debit card, or a direct bank transfer. Start by depositing a comfortable initial amount, like £400 or dollars. Many of these apps allow you to enter a promotional code during sign-up to claim a free fractional share to get you started. Selecting a tax-advantaged account today ensures that decades of compound interest remain entirely yours, rather than going to the government. To understand an index fund, think about a popular music chart. The songs with the highest sales move to the top of the list. If a song stops selling, it drops off the chart completely. An index fund applies this exact mechanism to publicly traded companies. The S&P 500 is a list of the 500 largest public companies in the US. The top slots are held by massive operations like Apple, Amazon, and Google. Inside your app, navigate to the Pie section, press the plus icon, and search for the S&P 500. You will see 2 versions of the fund. Select the one labeled Accumulation. This version automatically takes the dividends the companies pay you and uses them to buy more stock. Tap Auto Invest to finalize the setup and link it to a daily or monthly cash deposit. $5 a day is enough to begin. This chart models historical averages. Invest $250 a month for 31 years. Your total contribution is $94,000, but your portfolio hits $1.14 million. Expand that timeline to 40 years, and that same monthly deposit grows to $3.56 million. An automated index fund strips away human emotion and captures the combined economic output of the world's most powerful brands. You will likely be tempted to try picking individual stocks yourself, like buying shares of Tesla. To buy an individual stock, search for the company and open its trading page. You will see 2 main options, a market order and a limit order. A market order pays whatever the current price tag says immediately. Beginners should stick to this straightforward option. Type in your purchase amount, hit Send Buy Order, and the app executes the trade. Owning a specific company feels tangible, but it carries a concentrated risk of failure that a 500-company index fund completely bypasses. You are now an active owner of public equities, and your automated system is running. This graph compares 2 starting points. The top line is an investor starting at age 25. The bottom line waits 10 years to make those same deposits. Delaying a single decade incurs a massive mathematical penalty, drastically reducing your total wealth at retirement. The single hardest part of this entire process is holding your assets steady when the market inevitably drops. Trust the index fund you just built, let the dividends accumulate, and subscribe to the channel as we track the long-term results of these strategies. Setting up an automated system today and holding it for decades is the proven path to extracting wealth from the stock market.